Good morning, good afternoon, good evening, whenever you are watching this videos from. So I greet you all. My name is Moses Ogundele, a forex trader, macro analyst, and at the same time, I run copy trade service for investors. So this week I just want to walk us through the macro report we have for this week. And I will start from the last week print, which is the backstop. Okay. So looking at this data, we can say we got bad jobs news last week, and tomorrow the Fed tests us if they believe it too. Every month, the US government basically call up a huge sample of employers and ask, how many people did you hire this month? So that report is what is called non-farm payroll. You can call it NFP in short. So the non-farm, it means they strip out farm work because it swings around too much seasonally to be useful. So it is the single most watched number in the world economy because hiring is the heartbeat of the economy. If the companies are hiring now, people will tend to spend money. Okay, and if they stop hiring, people get nervous and spend less. So looking at this report now, last week came 57,000 jobs short of what was expected. And the government jobs data get revised, like a first draft that gets corrected once all the late paperwork comes in. And they revised last month numbers down too. So by another, it got revised by another 50,000. So it is not just one bad month. It is, we thought last month was fine. Turns out it wasn't either. And this month missed too. So two strikes in a row. Okay. So we had 50 minus 57K miss. Prior month refers down to, minus 50K. So um to the yield, yeah, move to the yield. Move to the yield. Yeah, still have the yield here. So um I know some of you will wondering, especially those that are new in FX, you'll be wondering what is yield, what is 2 year yield, 10 year yield, 30 years yield. So when the US government needs to borrow money, hmm, it sells bonds basically and high OU. So the yield is the interest rate people demand to lend government that money. So if people interest rates are going up, yield go up. If people think the Fed's about to cut rate, yields go up. Okay. So and the 2 year bonds is short enough that it's basically the bonds market best case had. So what the Fed going to do for the next couple years? The 2 year yield, it reacts fast to the job data, inflation data, Fed speeches, almost in real time. Longer bands like the 10 year are really slower and get influenced by other stuff like long run growth expectation. So if you want to really know what the market thinks the Fed does next, the 2 year yield is actually your guy. So and we talk on why this yield drives the whole dollar, which is the USD. High expected interest rates makes the dollar more attractive to hold. So you get paid more to sit in dollar. Okay. So when the 2 year yield rises, the dollar tends to rise with it. When the 2 year yield falls, the dollar tends to weaken. It is basically the steering wheel. Everything else, the stocks, other currency, commodities, a glance at what the 2 year is actually doing. So looking at the data now, we we have the last week final week close. We have the last 4 weeks high, the last 4 weeks low, the range. You know, we we have to look into it along with this week macro regime. Okay, so last week we had it close, as I said, at 4.13. Hold on, uh, 4.131%. So over the last month, it's been swung between high of 4.231% and a low of 4.016%. So right now, it is sitting kind of in lower middle of that range, not really screaming in either direction. Let's see if you can check through the chart. So this is the 3-year yield, and last week close we had it at 4.13. Okay, so and if you check the last 4 candles, you notice the high and you notice the low. Okay, so that is what we're actually referring to. Okay, so and what is the intention and why is this 2 year yield matters? Okay, I just spent 5 minutes talking about the weak jobs data that printed. Weak jobs data should usually push that yield down, right? That is what we will all be thinking, because it makes people think the Fed will cut rates sooner, but it hasn't broken down to a 4 weeks low level, which is the 4.01. Okay, the low level, which is of 4.01. So um, that is telling us that the banks hasn't fully believed the bad news yet. Okay, it's sort of holding the breath, and the thing that could make it, excel is tomorrow FOMC. Okay, so basically the banks market read the bad news, but hasn't decided if it's a headline or a trend yet. So tomorrow is actually going to decide. Okay, so now let's move to core engine. So and the focus is on tomorrow, like I said. So Fed makes its actual rate decision at schedule meeting roughly every 6 weeks. And a few weeks after each meeting, they release the minutes. Okay, basically detailed minutes note of what every committee members actually said and what they argued about behind the closed door. So it is old news in one sense. It's from a meeting that already happened, but it's gold for the market because it shows the committee private thinking, not just their public press conference talking point and all that. So what everyone's looking for tomorrow is the committee members already sounds nervous about the job market before the new bad data came out. And if yes, that was the market, okay, the Fed was already leaning dovish, and now they've got fresh bad data on top of it. You get that? So cuts are more likely. And if the tones read more like inflation still the priority, one data point doesn't change our plans. That is more hawkish read, and it could actually bounce back up, you know, to 4.2 whatever. So tomorrow by 7 p.m. Nigeria time, we are looking forward to that. Okay, we are looking forward to that. And on the right side, you could see we have three scenarios. And the first scenario, hawkish hold roughly around 15% chance. Yield push up and hold above that 4.231 high would need the Fed to basically brush off the job miss. Possible, but tough to justify after two straight downgrade uh, to the labor data. So the second scenario I have here is the balance, roughly 50% chance, and that's my my base case. So yield just kind of stay in range, stay in range 4.05 to 4.2 ish. So minutes show some concern, but nothing forces a full repricing. Okay, so this is the wait for more data, which is the outcome, and it is the most likely simply because minutes alone really force a big move. Okay, because they are backward looking. And the third one I have on this report is the Duffy shop price. Roughly, I put it at 35% chance. Yield breakdown under that 4.016% floor. And it happens if the tone shows the committee was already worried before this data. So the market runs with with that really, really fast. So we have 15, we have 50, and we have 35. Now, who is already positioned, which way, and what really matters so much. So we are waiting tomorrow to see what is going to print out. So the next thing we have to look at is the global smart money positioning matrix. Yeah, yeah. I see this data, man. Yeah, so every week regulators publish something called COT report, commitment of traders. So it shows how many contracts big institutional players like hedge funds, large speculators are holding, long or short. The COT data is one thing that you can't skip when you are trading in the financial market. So I will just be going through the six currencies. USD. As we can see on the report, we can see USD is flat, barely moved. The big money hasn't picked a side on the dollar yet. They are still watching, same as you and I. And on the Canadian dollar, just say this for the last. It is the best story. The bet against the Canadian is now the biggest short position of all the six currency. It's not even bigger this week. But remember what I told you to hold on to earlier in the beginning of this making this video, because Canada's growth number just came in hot. So think more about that. The actual economy data says Canada's is doing fine, and yet everyone just piled more money betting against it. That's what I called a crowded trade setup. So when the crowd all leaning one way and the data start, disagreeing with them, it doesn't mean they are wrong, but it means if Friday's Canadian job number also surprised to the upside, a lot of people could get skills out of that bet really fast, and that skills can really move the price hard and quick. So you can see the numbers. If you need the report, you can get through me, I will get the report to you. Just click the link below this video if you are watching on YouTube. And if you are watching on another social media platform, you see how to get in touch with me, or you find your way to join my Telegram channel. Okay, so the technical side, I spent more time on the technical side. I'm not really going to dive much into this technical side because you can. The report is very straight. So once you find your way to my channel, download this report and read this because I want to make this video really short. So let me start with USDJPY. On USDJPY, the prediction is long, which is my topic, because like I said earlier, is the cleanest position story of the group. So as long as the price holds above 161.58, I'm riding the trend up towards 162.64. So let me switch off to the chart. USDJPY, I'm on the list here. So the level that I'm looking at is 16158. Okay, should have been released on Monday, but because COT data could not get ready before Monday evening, so I could not actually get it released on Monday. So based on the report, we supposed to have the right from this point. Okay, but our COT could not ready then, so we could not really get enough backup data to give us a clear direction to enter this trade. Okay, that's why. And today is Wednesday, so most of the course that I have on the report is either the market has reacted to it, or the market is still yet to pick the side. Okay, that's why I said I won't be going much more on the technical side until after tomorrow FOMC. Okay, so you have the report, just download it, and you have it on your hands. So you just call it a day. We'll be watching our 2-year yield tomorrow. We'll be watching our 2-year yield tomorrow, and this 2-year yield above 4.23%, which is unlikely to happen. Above this 4.23, everything long dollar in this list gets stronger. Okay, just long your USD. And below 4.016 level that we discussed, that is telling you are dumping USD. Okay, so let's see how the market reacts tomorrow. After the FOMC, I have a review section on Thursday, coming up on Thursday on CapitalXtend. So on this section, we'll be discussing about what came out at the FOMC, what we should be expecting, the trades idea, okay, what we should be expecting next week, because next week is actually going to be more fun. Okay, it's really going to be more fun. So pay close attention to the 2-year yield and get this report downloaded on your device. Read it, read the technical course, read the macro report, digest it, and wait patiently for tomorrow FOMC. So that one being said, if you are yet to um, get into my 3 days training, because I'm currently running 3 days training for traders, for the beginners, and as well the traders that are yet to be consistent, consistent in their trading journey. So if you are yet to register for this training, find your way to get to me. I will add you to the group, and you can check the link below this video. Register first. You have to register on CapitalXtend. That's the first thing. After the registration, hit me up. I will get you added to the group. And if you are an investor looking for a trader to manage your portfolio, or you are a trader, you have funds separately that you're looking for a trader to help you manage, I'm currently running a copy trade on CapitalXtend as well. So you still have to register on the CapitalXtend, verify your account, fund your account, and reach out to me to get your account connected to my own account. So as I'm trading, you also be receiving the exact trades on your hands. So it's quite simple. For the past 9 months now, we've generated over um, almost 200%. So get your account funded, and I will see you on Thursday on the CapitalXtend section, which is the review section. So before then, I wish you well. I wish you happy trading. I wish you more wins. So see you Thursday. Thank you.